Hey everyone, it's George from Blockchain TXP, and in today's episode, we are going to take a deep dive into the world of blockchain and cryptocurrency. And in this specific episode, guys, we are going to be talking all about tokenization. Because look, guys, ever since Larry Fink did have an interview with CNBC, he talked about tokenization, and the entire cryptocurrency and blockchain world, they are crazy now about tokenization. So what I decided to do, guys, is I thought about releasing an episode focusing only on tokenization. And in this particular episode, guys, we are going to be discussing how tokenization is redefining the way we perceive and interact with assets, from real estate and artwork to stocks, bonds, and even intellectual property. Now look, guys, what I'm going to be discussing is that with tokenization, how we can represent these assets as digital tokens on a blockchain, because with tokenization, we unlock new levels of liquidity, accessibility, and efficiency in the financial market, isn't it? So in this particular episode, guys, what you can expect is a breakdown of intricate details of tokenization. So I'm going to be focusing on several key areas, guys. That is asset representation, fractional ownership, liquidity, transparency and security, compliance and regulations. I'll also go in touch base on interoperability, and I'm also going to be sharing some emerging use cases in the world of tokenization. Now look, guys, it's really important to understand that tokenization might just be the new big trend in the cryptocurrency world. So I'll go ahead and share my thoughts and opinion on it, guys. Now look, guys, in this particular episode, I'm also going to go ahead and discuss the key difference between initial coin offering and security token offering. Because look, guys, in 2016 and 17, ICOs, or initial coin offering, they made quite a lot of news, isn't it? That was ideally supposed to be followed by security token offering, but the hype got derailed, and DeFi, or decentralized finance, that was the next big thing, followed by NFTs, followed by metaverse, and now looks like it's artificial intelligence, isn't it? But it looks like security token offerings and tokenization is definitely making a comeback. So in this particular episode, guys, what I'm going to be doing is I'm going to be highlighting the distinct purposes between ICO and security token offering. I'll go ahead and discuss the regulatory landscapes and also the market dynamics. Now look, guys, it's really important to understand that initial coin offering and security token offering have both played a significant role in the fundraising landscape of blockchain projects, but they definitely come with unique sets of challenges and opportunities, isn't it? So I'll go ahead and share my thoughts and opinion on it. Now look, guys, whether we like it or not, Central Bank Digital Currencies are definitely going to go mainstream in the next couple of years. So what I'm going to be doing in this episode, guys, is I'm going to be exploring the specific consideration of CBDCs, or Central Bank Digital Currency, and how tokenization can impact the implementation. So we'll touch base on topics such as interoperability, smart contracts, privacy and regulatory considerations, and we'll definitely have in-depth discussion on it. Finally, guys, I'll go ahead and address one of the critical risks associated with digital currencies and tokenization, that is to do with double spending. Now look, guys, one of the biggest innovations of Satoshi Nakamoto was that he was able to solve the double spending problem. Now prior to Bitcoin, guys, there were cryptocurrencies, but Satoshi Nakamoto was able to solve the double spending problem. So look, guys, whenever you're assessing any cryptocurrency or blockchain protocol or even CBDCs, you need to understand and ask your question, can that particular project or protocol go ahead and do double spend? And if the answer is yes, then we are going back to the Web 2 world, isn't it? So in today's episode, I'll definitely delve into the security measures and real-time verification mechanism necessary to mitigate the risk and ensure the integrity and reliability of tokenization system. Now look, guys, whether you're an investor, a tech enthusiast, or someone curious about the future of digital finance, this specific episode on tokenization is packed with insights and knowledgeable information that you don't want to miss. So quite a lot to cover, guys, in today's episode. Let's kickstart with it right away. Thank you to our sponsors for being part of the Blockchain DXP journey. Firstly, Advanced Media. Advanced Media, guys, is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact, guys, the very mic that I'm recording is being sponsored by Advanced Media as well. And Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing, guys. They're taking corporate social responsibility very seriously. And they're focusing on 3 Ps. That is people, planet, and prosperity. Now listen, guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website, that is www.amt.tv. And here's the beautiful thing, guys. They also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so, guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE. So definitely check it out. And also, guys, Advanced Media is committed to persistently developing, organizing, and hosting training workshops, seminars, and community events that educate, inform, and familiarize consumers with new equipment and the latest technological advances. So listen, guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gov Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen, guys, these NFTs are going to be absolutely massive. So do one thing. Go to Spotify, go to iTunes, go to any leading podcasting platform and search for Rise in the Obstacle Course Race podcast. And finally, guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now, guys, since you're taking care of that, let me go ahead and touch base on tokenization, guys. And I want to go ahead and touch base on few areas, that is asset representation, fractional ownership, liquidity, transparency and security, compliance and regulations, and I also want to talk about interoperability and emerging use cases so far as tokenization is concerned. So let me know, guys, what are your thoughts are regarding tokenization, because look, guys, when you talk about tokenization in blockchain context, it is really important to understand that in the context of blockchain technology, tokenization refers to the process of converting rights to an asset into a digital token on a blockchain, and this tokenization process, guys, allows for representation of real-world assets such as, let's say, real estate, arts, commodities, or financial instruments as digital tokens that can be traded, transferred, and managed within the blockchain ecosystem. So let me go ahead and touch base on the points that I mentioned, guys. So when you talk about asset representation, guys, tokenization allows for representation of various types of assets on blockchain, including real asset properties, artwork, commodities, stocks, bonds, and even intellectual property rights. And look, as Larry Fink, the CEO of BlackRock, he's heavily invested into tokenization. Now look, as so far as tokenization is concerned, each token represents a fraction of ownership or rights to the underlying asset. For example, guys, if a real estate is tokenized, each token might represent ownership of a specific square footage or percentage of the property, and digital tokens, guys, can be created on blockchain platform, typically through the issuance of smart contracts that define the terms and conditions of the tokenized assets. Now, so far as fractional ownership is concerned, guys, Tokenization enables fractional ownership of assets, meaning that individuals can purchase and own a fraction of an asset rather than the entire asset itself. And fractional ownership, guys, lowers the barrier to entry for investing in traditionally illiquid or expensive assets such as real estate or fine art, making investment opportunities accessible for a broader range of investors. And investors, guys, can diversify the portfolios by owning fractional shares of multiple assets, thereby spreading risks and potentially increasing returns. Now, so far as liquidity is concerned, guys, by tokenizing assets, liquidity is increased as digital tokens can be traded on blockchain platforms with ease and efficiency, and investors, guys, can buy and sell tokens peer-to-peer without the need for intermediaries, thereby reducing transaction costs and also increasing market efficiency, isn't it? And look, guys, when you talk about being 24/7, tokenized assets can be traded 24/7 on global cryptocurrency exchanges, thereby providing greater liquidity compared to traditional financial market with limited trading hours. Now, so far as transparency and security is concerned, guys, blockchain technology provides transparency and security to the tokenized process, and they do that by recording ownership records and transaction history of a distributed ledger. And each transaction, guys, as you know, is cryptographically secured and recorded in blocks, making it absolutely immutable and tamper-proof. And look, guys, smart contracts can also automate various processes, isn't it, related to, let's say, token issuance, transfers, and distribution of dividends, thereby ensuring trust and eliminating the need for intermediaries. Now, so far as compliance and regulations is concerned, guys, tokenization platforms must adhere to adherence requirements, especially in sectors like securities and real estate, to ensure compliance with relevant laws and regulations. Now, look, guys, I really am not sure how you can go ahead and manage compliance and regulations on, let's say, an open blockchain. That is where permission blockchain kicks in, isn't it? But look, guys, permission blockchain is just another name for software, to be honest. Now, so far as compliance and regulations is concerned, compliance measures such as KYC and AML checks may be integrated into tokenization platform to verify the identity of investors, thereby preventing money laundering and illicit activities. And this is the area, guys, where some notorious characters may try to portray the benefits of permission blockchain. Now, look, guys, there is nothing called as permission blockchain. The other word for that is software. Now, keeping Franklin Templeton and BlackRock's future thoughts on tokenization, guys, I wouldn't be surprised if the price of Ethereum definitely pumps up to the moon, because they are heavily invested in tokenization. Or could it be possible that they truly don't understand how blockchain technology works? I wouldn't be surprised, guys, if that is the case as well. Now, look, guys, so far as compliance and regulations is concerned, regulatory frameworks for tokenized assets are still evolving at this point of time, and compliance with local and international regulations is essential for legitimacy and long-term viability of tokenization projects. Now, so far as interoperability is concerned, guys, interoperability between different blockchain is crucial for widespread adoption of tokenization. So standards such as, let's say, ERC20 or ERC721 for Ethereum-based tokens or protocols like the ILP or Interledger protocol facilitate the seamless transfer of tokens across different blockchain networks. Now, look, as interoperability allows for integration of tokenized assets into various applications and ecosystem, thereby increasing the utility and value proposition. And so far as emerging use cases is concerned, guys, tokenization opens up new possibility for asset ownership, investment, and value creation across various industries. Now, look, guys, there are different use cases that a lot of people will be talking about so far as tokenization is concerned. They're going to be talking about supply chain management, they're going to be talking about intellectual property rights, and even personal identity management. Now, so far as tokenization is concerned, the points that I mentioned earlier, guys, collectively illustrate the transformative potential of tokenization in the blockchain context, paving the way for new economic models, distributed ecosystems, and innovative application across industries. Now, let me know, guys, what are your thoughts are. Now, truth be told, guys, I do envision 2 to 3 years from now, tokenization might just be the new buzzword. So I'm really curious to check, guys, what the institutional and retail interest is, let's say towards Ethereum or even Solana for that matter. Now, I want to go ahead and give us some basic level information about security token offering, and then, guys, I want to go ahead and compare it with ICO, that is initial coin offering, so you guys get an idea on the key difference between security token offering and initial coin offering. Now, so far security token offering is concerned, guys, it is a fundraising method in the blockchain or cryptocurrency space that involves the issuance of digital tokens that represent ownership or rights to a tangible or intangible asset, something similar to traditional securities such as let's say stocks, bonds or real estate investments, isn't it? Now so far as initial coin offerings is concerned guys, that typically issue utility tokens, security tokens issue security tokens that are subject to regulatory compliance and offer investors certain rights and protection. Now look guys, so far security token offering is concerned, I really am perplexed to know, can it be built on open blockchain or can it be built on permission blockchain? Can you go and issue security token offerings on Central Bank Digital Currency? I don't see why not. So let me go ahead and discuss some key points about security token offerings, and I'd like to touch base on 6 areas guys, that is regulatory compliance, asset-backed tokens, investor rights and protection, liquidity and market access, fractional ownership and accessibility, and finally guys let me go ahead and touch base on tokenization benefits as well. And then guys what I want to do is I want to delve deeper into the differences between initial coin offering and security token offering. So let me know what your thoughts are regarding that. But first let me go ahead and touch base on security token offering. Now regarding regulatory compliance guys, security token offerings are subject to regulatory compliance requirements, particularly security laws in the jurisdiction where they operate. Now at this point of time guys, I'm pretty much sure you know what Howey test is, isn't it? In case you don't know it guys, what I'd really recommend you to do is just go to YouTube and just try to understand what Howey test is. Now issues of security tokens guys must adhere to regulations such as know your customers or KYC and anti-money laundering checks to verify the identity of investors and prevent fraudulent activities. Now is there a way we can go ahead and implement this in open blockchain as well? Definitely yes, I don't see why not, but that'll be a role where a centralized entity will kick in, isn't it? And what government entities can do is they can have regulations set aside only for those entities, and so far as compliance with security regulations is concerned guys, they provide investors with legal protection and ensure transparency and also accountability in the issuance and trading of security tokens. Now the next point is regarding asset-backed tokens guys, and security tokens represent ownership or rights to underlying assets, which can include traditional financial instruments such as let's say equities, bonds, derivatives or investment funds, as well as real-world assets like real estate, artwork or commodities. And each security token guys is backed by the value of underlying asset, providing investors with a claim to ownership or a share of profits generated by the asset. Now the third point is regarding investor right and protection guys, and look guys, investors in security token offerings typically receive rights and protections such as let's say dividends, profit sharing, voting rights or ownership staking in underlying assets, and the term and conditions of security tokens are usually defined as smart contracts, which are self-executing smart contracts with the term of agreement directly written into code, ensuring transparency and enforceability of investor rights. And this is the point that I mentioned earlier guys, these are the areas in the smart contract where let's say the government entity can go ahead and put let's say KYC and AML requirements even on an open blockchain. Now so far as liquidity and market access is concerned, security token offer greater liquidity compared to traditional securities as they can be traded on blockchain-based platform 24/7, providing investors with access to global markets and a broader pool of liquidity as well. And secondary trading of security tokens guys will allow investors to buy and sell tokens peer-to-peer without the need for intermediaries, reducing transaction cost and increasing market efficiency. Now this point guys, I really am not sure if it will be ideal to go ahead and let's say do it on open blockchain, because let's say if there's a security token offering issued let's say in US, can a person from Iran go ahead and buy it on a secondary trading platform? I really am not sure. Or even let's say a citizen from Russia, because right now there are sanctions in place for these regions, isn't it? So these are things that you need to factor as well. Now so far as fractional ownership and accessibility is concerned guys, security token offerings enable fractional ownership of assets, allowing investors to purchase and own a fraction of high-value assets that may be inaccessible or illiquid in traditional markets. And fractional ownership guys lowers the barrier to entry for investing in assets such as real estate, private equity or venture capital, making investment opportunities accessible to a broader range of investors. Now the final point is regarding some of the benefits of tokenization guys, because look, by tokenizing assets and issuing security tokens on a blockchain, issuers can streamline the issuance process, reduce administrative costs, and automate compliance procedures. And tokenization guys can also enable greater transparency, traceability and liquidity for asset owners while providing investors with increased market access, diversification opportunities, and also investor protection, isn't it? So look guys, overall STOs or security token offerings represent a regulated and compliance approach to fundraising and also as a tokenization in the blockchain and cryptocurrency space. And by leveraging blockchain technology, guys, and also using smart contracts, security token offerings offer investors access to a wide range of asset classes, while at the same time providing issuers with efficient capital raising mechanism and also compliance with security regulations. So look guys, these are some basic level information regarding security token offering. Now what I'd really recommend you to do is, guys, in case you want to go ahead and look at a real life case, Bitfinex, they went ahead and raised the first security token offering in my opinion, and that was when Tether's funds were actually locked up by a bank. And if I'm not mistaken, guys, the bank was associated with a country from Poland. So in order to go ahead and keep the Tether USDT working, what they did, they went ahead and released a security token offering. And the token that Bitfinex launched, guys, was UNUSSED LEO token. So definitely feel free to go ahead and check it out, and that'll give you some explanation on how security token offerings work. Now guys, what I want to do is I want to quickly compare ICOs, that is initial coin offering, with security token offering. Now look guys, going back to 2017, ICO was one of the biggest hypes in the cryptocurrency space, isn't it? So let me go ahead and touch base on 4 areas, that is purpose and utility, regulatory landscape, investor risks that are associated with ICOs, because 90% of the projects have completely disappeared stealing people's funds, isn't it? And I'll also go ahead and touch base on 4th point, that is market dynamics. Now so far as the purpose and utility of ICO is concerned, guys, ICOs or initial coin offerings are primarily used to raise capital for blockchain projects or even startups by issuing utility tokens to investors. Now these tokens, guys, typically grant access to product, service or platform within the project's ecosystem. Now investors purchase ICO tokens with the expectation that the value will increase as the project grows and the demand for the utility token rises. Now so far as regulatory landscape is concerned, guys, between ICO, this I believe is the key difference between an ICO and security token offering. Now ICOs, guys, they operate in a relatively unregulated environment with limited oversight from regulatory authorities. While some jurisdictions have issued guidelines or warnings regarding ICOs, regulations vary widely across different countries and regions. Now the lack of regulatory clarity, guys, has led to concerns about investor protection, fraudulent activities, and the potential for token value manipulation. Now look guys, in the 2017 era, the ICOs that were coming up were absolutely crazy, and while to be honest, people used to literally copy-paste someone else's white paper, raise hundreds if not millions of dollars. Now look guys, what I'd really recommend you to do is go to Netflix and look at a documentary called as Bitcoin, and they did exactly the same thing. They raised millions of dollars, and what is a bit scary, guys, based on the documentary, they had some celebrities and even boxers part of the project as well. And what is really crazy, guys, is the guy who was the key person for the project had no idea what he was building as well. So definitely go ahead and check out Bitcoin. Now so far as ICO is concerned, guys, the next point I'd like to touch base is investor risk. And investing in ICOs, guys, carries significant risk for investors, including the possibility of losing the entire investment due to project failures, scams or regulatory crackdowns. And many ICO projects lack transparency and accountability and a clear business model, leading to instances of fraud, mismanagement, and token value collapse as well. And the documentary, guys, that I talked about Bitcoin is a classic example of this. And what is a bit scary, guys, is, in my opinion, the documentary Bitcoin might not have been even in the top 10 so far scams are concerned. Now so far as market dynamics is concerned, guys, during the ICO boom of 2017, thousands of projects raised billions of dollars through token sales, fueling speculation and hype in cryptocurrency market. However, the ICO market experienced a sharp decline in subsequent years due to regulatory crackdowns, investor skepticism, and the proliferation of scam projects. Now today, guys, ICOs are less common and projects are more cautious about conducting token sales due to regulatory risks and market uncertainties. Now look, guys, so far security token offerings are concerned, I'm going to repeat some of these points just so you guys get an idea so far as a comparison between, let's say, ICO and security token offering. And as I mentioned earlier, guys, security token offerings issue security tokens that represent ownership or rights to underlying assets such as, let's say, equities, bonds, funds, real estate or financial instruments. Now security token offering, guys, offer investor financial rights and protections including dividends, profit sharing, voting rights or ownership stakes, something similar to traditional securities. Now so far as regulatory compliance is concerned, they aim to comply with security regulations in jurisdictions where they currently operate, including registration requirements, investor accreditation, and disclosure obligation. Now so far as ICO is concerned, guys, You don't need to do any investor accreditation. There is no KYC, absolutely nothing, isn't it? But so far as STO is concerned, by adhering to regulatory standards, security token offerings provide investors with legal protection and enhanced transparency and accountability in the issuance and trading of security tokens. Now, so far as liquidity and market access is concerned, guys, security token offerings offer greater liquidity compared to traditional securities, as they can be traded on blockchain platform 24/7, providing investors with access to global markets and a broader pool of liquidity. This is kind of similar to ICOs, isn't it? And security token offerings, guys, offer greater liquidity compared to traditional securities. And security trading of security tokens, guys, allow investors to buy and sell tokens peer-to-peer without the need for intermediaries, reducing transaction costs and increasing market efficiency. This, guys, is something what ICOs tend to build as well, isn't it? Now, security token offerings, guys, enable fractional ownership of assets, allowing investors to purchase and own a fraction of high-value assets that may be inaccessible or illiquid in traditional markets, and fractional ownership lowers the barrier to entry for investing in assets such as real estate, private equity, or venture capital, making investment opportunities accessible to a broader range of investors. Now, look, guys, I very specifically remember there was so much of hype regarding security token offering that was immediately after the ICO era, and people were actually stating that security token offering has a potential of being 100 times much bigger than ICOs, but that time the entire hype got derailed and that thing got replaced by DeFi, followed by NFTs and Metaverse. Now, so far security token offering is concerned, guys, one thing which a lot of CMOs, that is Chief Marketing Officer, talk about is, let's say, having some ownership on a property in Burj Khalifa. Now imagine, guys, there is 1,000 square feet of property in a room in Burj Khalifa. What they will actually state is that rather than buying the entire room, you can go out and buy just 1 feet of that particular room. Now, I kind of disagree, guys, because I feel that they're using that as a marketing tool in order to go out and sell that STO. The same analogy, guys, they'll be using for luxury yacht, maybe even iron watches or even luxury art. Now, look, guys, their job is to go out and sell these tokens, isn't it? But look, guys, what I think is, let's say if everyone were in a position to go out and get access to this, then it breaks down the whole value, it breaks down the whole uniqueness of it, isn't it? And it is a similar concept that is used in NFTs as well. So these are things you need to think about as well. Now look, guys, overall, while ICOs and security token offering both involve token sales on blockchain platform, they differ significantly in terms of purpose, regulatory compliance, investor protection, and market dynamics. And security token offerings, guys, represent a more regulated and compliant approach to fundraising and asset tokenization, offering investors greater transparency, accountability, and legal protection compared to initial coin offering. So let me know, guys, what your thoughts are regarding the comparison between security token offering and initial coin offering. Now, guys, since you're taking care of that, what I want to do is I want to go ahead and look at tokenization from a real estate point of view. And then, guys, what I want to do is I want to go ahead and touch base on security token offering, on how it merges with real estate. So let me know, guys, what your thoughts are. Because look, guys, BlackRock and even Franklin Templeton, they are massive advocates of tokenization. And I've said this thing recently, guys, I wouldn't be surprised in the next coming years, tokenization might just be the next big thing. Now, so far as tokenization in real estate is concerned, it refers to the process of digitizing ownership rights to real property and representing them as digital tokens on a blockchain. Now, this process, guys, subdivides real estate assets into smaller, more manageable units, allowing investors to purchase fractional ownership shares, and each token, guys, represents a specific portion of the property, and investors can buy, sell, or trade these tokens on blockchain-based platforms. Now, one of the primary benefits of tokenization is fractional ownership, guys. This enables investors to participate in real estate investments even with lower capital requirements. Instead of, let's say, needing to purchase an entire property, investors can now buy tokens representing fractions of the property's value, and this opens up real estate investment opportunities, guys, to a wider range of individuals, including retail investors who may not have access to traditional real asset markets. Moreover, guys, tokenization introduces liquidity to traditional illiquid real estate assets, and by digitizing ownership and creating a marketplace for trading tokens, investors have the ability to buy and sell the ownership stakes more easily. This liquidity, guys, provides investors with greater flexibility, as they can exit their investment more quickly if needed, or even diversify the portfolios by investing in multiple properties across different geographical locations. Additionally, guys, tokenization offers transparency and security through use of blockchain technology. And transactions, guys, in blockchain, as we know, are recorded on decentralized distributed ledger that is immutable and transparent, thereby reducing the risk of fraud and manipulation, isn't it? And property ownership records, rental income distribution, and other financial transactions are securely stored on blockchain, thereby providing investors with a reliable and also tamper-proof record of their investments. The Lucas tokenization can also lead to cost savings and increased efficiency in real estate transactions, and by eliminating intermediaries such as brokers, lawyers, and custodians, tokenization reduces transaction costs and administrative overhead as well. For smart contracts, guys, that are self-executing contracts with the terms of agreements are directly written into code, isn't it? And they may automate many aspects of real asset transactions, such as, let's say, property transfers, rental payments, even dividend distributions, and can further streamline the process, in my opinion. Now, despite these benefits of tokenization, guys, there are also a couple of challenges, particularly in terms of regulatory compliance and market adoption. And regulatory frameworks of tokenization securities vary by jurisdiction and may require compliance with security laws, investor accreditation, and also KYC checks, isn't it? Now, this is something which I touched base yesterday as well, guys. Would it be ideal to go ahead and build tokenization platforms so far as real estate is concerned in an open blockchain or in a software? Another name for software is permission blockchain, isn't it? But so far as tokenization in real estate is concerned, guys, market adoption of tokenized real estate may be hindered by factors such as investor education, technological barriers, and also the need for standardization and also interoperability among blockchain platforms, isn't it? And one thing, guys, which I touched base yesterday is regarding sanctions. So let's say if I go ahead and issue a security token offering, can, let's say, someone from Russia go ahead and buy it, considering the fact that it's on a distributed protocol? I really am not sure what the answer to that is, to be honest. And that is one of the reasons issuers of security token offering platforms, they might be trying to go ahead and twist it and try to go ahead and give you the benefits of permission blockchain. But look, guys, there is nothing called as permission blockchain. Another word for that is software. Now, going back to the news, guys, while tokenization has the potential to revolutionize the real estate industry by democratizing access to investment opportunities, increasing liquidity, and improving transparency and also efficiency in the transactions, its widespread adoption will depend on overcoming regulatory hurdles and addressing market challenges. And as the technology matures, guys, regulatory frameworks will evolve. Tokenized real estate, guys, in my opinion, is expected to play an increasing important role in the global real estate market. Now, look, guys, you need to understand that trillion-dollar entities such as BlackRock and even Franklin Templeton, they are heavily going to be invested in tokenization. So definitely keep an eye on what is tokenization. Now, what I want to do next is, guys, I want to go ahead and link how security token offering, or STO, will actually merge with real estate. And one of the companies BlackRock has partnered with, guys, is called a Securitize with a Z or Z. And they were heavily invested in security token offering during the 2019 and 20 era. So what I'd also recommend you to do is go to Securitize's website, guys, and try to go ahead and learn something. But so far security token offering is concerned, it is essentially a fundamental method that involves issuing digital securities or even security tokens on a blockchain, isn't it? And these tokens, guys, represent ownership in an underlying asset, such as, let's say, real estate, and are subject to security regulations. And security token offering, guys, have gained significant traction in the real estate industry as a means of tokenizing property ownership and facilitating investments in real estate assets. So let me go ahead and share some area, guys, how security token offering merges with real estate. And there are 6 points, guys, I'd like to touch base. One is fractional ownership, liquidity, compliance, transparency and security, efficiency and global access. But these points, guys, today I'll go ahead and connect it with the real asset world. So far as fractional ownership is concerned, guys, security token offerings enable fractional ownership of real estate assets by dividing them into smaller units represented by security tokens, and investors, guys, can purchase these tokens, which entitle them to a proportional share of ownership in the property. And fractional ownership, guys, through security token offerings allow investors to participate in real estate investment with lower capital requirements, opening up investment opportunities to a broader range of individuals. Now, if I'm not mistaken, guys, there is a firm in Dubai that tried to do that at least few years ago. Now, they definitely did not issue any security token offering. they were doing it on a private basis. So I really am not sure what the update to that is. I'll try to find out the name of that company, guys, and I'll try to share it in the episode that I'll release tomorrow. Now, so far as liquidity is concerned, by tokenizing real estate assets through security token offerings, property owners can create a secondary market for trading security tokens, and this, guys, introduces liquidity to traditional illiquid real asset investments, as investors, guys, will now have the ability to buy, sell, or even trade their ownership stakes on blockchain-based platform, isn't it? And liquidity provided by security token offering, guys, allows investors to exit their investments more easily or even diversify the portfolios by investing in multiple properties. But so far as compliance is concerned, guys, security tokens issued through security token offerings are subject to security regulations which vary by jurisdiction, and property owners conducting STOs must comply with applicable security laws, including registrations, disclosure, and investor accreditation requirements as well. And by adhering to regulatory standards, security token offerings provide investors with legal protection and also regulatory oversight, thereby enhancing trust and confidence in the market. Now, so far as transparency and security is concerned, guys, security token offerings leverage blockchain technology to provide transparent and secure record keeping of property ownership and transactions. And transactions, guys, by now, as you know, are recorded on distributed ledger that is immutable and transparent, isn't it? Thereby reducing the risk of fraud or manipulation. Property ownership records, dividend distributions, and other financial transactions are securely stored on blockchain, providing investors with a reliable and tamper-proof record of their investments. Now, so far as efficiency is concerned, guys, you need to understand that security token offerings streamline the process of raising capital for real estate investment, and they do that by digitizing ownership and also automating compliance procedures. And smart contracts, guys, which are self-executing contracts with the terms of agreement directly written into code, automate many aspects of the STO process, and things such as investor verification, token issuance, and dividend distribution. Everything is taken care in smart contracts, isn't it? And this reduces administrative overhead and transaction cost, making real estate investment more efficient and accessible. Now, so far as global access is concerned, guys, security token offerings enable global access to real estate investment, and they do that by leveraging blockchain technology and digital securities. And investors from all around the world can participate in STOs, as security tokens can be traded on blockchain-based platform with minimal barriers to entry. And this opens up real estate investment opportunities to international investors and expands the pool of potential capital for different property owners. So look, guys, essentially in summary, security token offerings will play a pivotal role in real estate tokenization, and they will do that by enabling fractional ownership, introducing liquidity, ensuring regulatory compliance, providing transparency and security, and will also streamline the investment process and facilitate global access to real estate investment. And as the real estate industry continues to embrace blockchain technology and digital securities, security token offerings are expected to become increasingly prevalent as a means for unlocking value and democratizing access to real estate investments. So look, guys, this is an area you definitely need to go and look into, because I'm pretty much sure, guys, tokenization will be the next big hype, at least for the next 2 to 3 years in my opinion. Now, guys, what I want to do next is I want to go and look at tokenization in the world of central bank digital currency. Now look, guys, whether we like central bank digital currency or not, central bank digital currency will be mainstream in the next couple of years. And what I'm going to be doing, guys, in the month of June, I will be having a session explaining central bank digital currency. So we'll look at different types of CBDCs, and I'll go and discuss some of the benefits, some of the negatives, and some of the dangers of central bank digital currency as well. And I'll also go ahead and make a quick comparison between central bank digital currency and Bitcoin. But in today's episode, guys, I'm going to be explaining how tokenization will actually work in central bank digital currency. Now look, guys, as we know, tokenization is a process where real-world assets or financial instruments are represented digitally as tokens on blockchain or distributed ledger technology, isn't it? And this technology, guys, is increasingly being explored and implemented by central banks in the context of central bank digital currencies. So what I want to do is, I want to take a deep dive into some of the key aspects and considerations surrounding tokenization in the context of central bank digital currencies, also called as CBDCs. So I want to go ahead and touch base on 6 points, guys. That is asset tokenization, interoperability and standards, smart contracts and programmability, privacy and confidentiality, regulatory considerations, and also technological challenges. And after that, guys, what I want to do is I want to go ahead and quickly compare central bank digital currency on tokenization in the context of double spending. Because look, guys, so far central bank digital currency is concerned, double spending is one of the biggest dangers, isn't it? So I'll definitely go ahead and share my thoughts and opinion on it. But first, guys, let's go ahead and look at tokenization in the world of CBDCs. And the first point I'd like to talk about is regarding asset tokenization. Now look, guys, central bank digital currencies can represent various types of assets, including fiat currency, securities, commodities, or even real-world assets like real estate or artwork. And by tokenizing these assets, central banks can digitize and facilitate the transfer on blockchain networks. Now, asset tokenization, guys, involves the conversion of physical or digital assets into digital tokens, each representing a fraction or whole unit of the underlying asset. And these tokens, guys, are then recorded on a blockchain or distributed ledger, providing a secure and transparent means of ownership and transfer. Now, so far as interoperability and standards is concerned, guys, you need to understand that interoperability refers to the ability of different systems and network to communicate and interact seamlessly. Now look, as in the context of Web 3.0 and CBDCs, we talk about interoperability as a massive thing, isn't it? That should not be the case, because in the world of Web 2.0, guys, interoperability has been in place for well over 2 decades. So you can send a Gmail to a Yahoo account or a Hotmail account. That is interoperability, isn't it? But look, guys, in the world of tokenization, interoperability is crucial for facilitating cross-border transactions and ensuring compatibility with existing financial infrastructure. Now, could it be possible to have CBDCs interoperable, let's say, with Ethereum or let's say Solana blockchain? I definitely do think so, and that is something which needs to be worked on as well, isn't it? And to achieve interoperability, guys, standardization efforts are essential, and standard protocols and formats for tokenized assets and transactions enable different CBDCs to communicate effectively, thereby reducing friction and enhancing efficiency. So far as cross-border payments and settlements is concerned, now so far smart contracts and programmability is concerned, guys, smart contracts, as we know, are self-executing smart contracts with the terms of agreement directly written into code, isn't it? Now in the context of tokenized CBDCs, guys, smart contracts enable programmable functionality, allowing for automated and conditional transactions. For example, guys, smart contracts can automate the execution of complex financial agreements, such as, let's say, derivative contracts or even supply chain financial arrangements, and they can also facilitate automated compliance with regulatory requirements such as KYC, that is Know Your Customer, and also AML regulations, that is anti-money laundering. Now look, guys, I did touch base on this yesterday as well. It is possible to do it on permission blockchain, but so far central bank digital currency is concerned, I would like to assume that this is already in place, as it is, because in order to use your CBDCs, you need to go ahead and do your KYC and also do your AML, because it will be connected directly to your central bank or to your banking account. Now, so far as privacy and confidentiality is concerned, guys, while blockchain technology provides transparency and immutability, it also raises concerns about privacy and confidentiality, particularly in the context of financial transactions. Now, central banks must implement privacy-enhancing technologies, and they can do that by, let's say, implementing zero-knowledge proofs or privacy-preserving protocols, and they need to protect sensitive transaction data while still maintaining the integrity of the blockchain ledger, in my opinion. Now, look, guys, balancing transparency with privacy is extremely crucial in the design and implementation of tokenized CBDCs to ensure compliance with privacy regulations and also user expectation. Now look, guys, the next point I want to talk about is regulatory consideration, and this is the area, guys, where I do feel that central bank digital currencies will have a much better competitive advantage, let's say, so far as open blockchain is concerned. Now look, guys, I'm also thinking about what happened to Tornado Cash. Keeping all these things in mind, guys, I hate saying this, but tokenization might just be better so far as CBDCs is concerned, because look, the tokenization of assets and issuance of CBDCs will raise various regulatory considerations, including legal frameworks, compliant requirements, and oversight mechanism. But because it is managed by a central entity and central bank, I'm pretty much sure they have rules and regulations already in place. Now, central banks, guys, must collaborate with regulatory authorities to establish clear guidelines and regulatory frameworks for the issuance, trading, and custody of tokenized assets and CBDCs, and this includes addressing concerns related to investor protection, market integrity, and systemic risk. Now finally, guys, I'd like to talk about technological challenges. Now look, as implementing tokenized CBDCs involve overcoming various technological challenges, including scalability, interoperability, security, and usability as well. But central banks must invest in robust and scalable blockchain infrastructure, develop interoperability standards, and implement robust security measures to ensure the resilience and reliability of tokenized CBDC system. So look, as in summary, tokenization holds significant potential for transforming the financial landscape by digitizing assets, enhancing efficiency, and enabling new form of programmable finance. However, guys, realizing this potential requires addressing various technical, regulatory, and operational challenges to ensure the safe, secure, and efficient deployment of tokenized CBDCs. Now, look, guys, these are some basic points on how tokenization can actually work with central bank digital currency. But look, guys, one of the biggest dangers of central bank digital currency is double spending, and this goes back to why Bitcoin was created. Now, look, guys, one of the inventions of Satoshi Nakamoto was actually solving the double spending problem. Now, what I'd really recommend you to do is, guys, on the 20th of April, I went ahead and explained what double spending is and what is it that Satoshi Nakamoto did in order to prevent double spending. So please feel free to go ahead and listen to that episode. Now, it's really important to understand, guys, that so far central bank digital currency is concerned, as the word indicates central, there is 100% possibility of double spending. So let me go ahead and share how central bank digital currency will actually merge with tokenization in the context of double spending. Because look, guys, double spending occurs when the same digital currency is spent more than once, exploiting a loophole in transaction verification process. Now, this risk is particularly pronounced in digital currency systems where transactions are recorded and verified on decentralized network such as blockchain. Now, in case of central bank digital currencies issued in tokenized form, there is a very high risk of double spending if malicious actors attempt to manipulate the system by spending the same token multiple times before the transactions are recorded and verified. And look, as the government authorities, they can also go ahead and easily double spend. Now, so far as tokenization and double spending is concerned, guys, tokenization involves representing real-world assets or financial instruments as digital tokens on a blockchain or distributed ledgers in it. Now, while tokenization offers benefits such as increased efficiency and transparency, it also introduces the risk of double spending if it is not implemented securely, and if a tokenized CBDC, guys, is not designed with robust mechanism to prevent double spending, malicious actors or government entities could attempt to create counterfeit tokens or manipulate transaction records to spend the same token multiple times, leading to financial losses and undermining trust in currency and the central bank. Now, look, guys, this is where you also need to understand the pillars of open blockchain, and one of the pillars of open blockchain is publicly verifiable. And if you look at all Bitcoin transactions, guys, absolutely anyone in the world can go ahead and verify these transactions, isn't it? But in the context of CBDCs, guys, only you will be able to verify only your transactions, and the second party who can go ahead and verify the transactions is the central bank, isn't it? And there are systems in place. If there is a bank that will be involved, they might be able to view the transactions as well. So it is so critical, guys, that when you're designing CBDCs or even tokenization, you truly need to understand double spending problem. Now, the next point, guys, I'd like to talk about is security measures. And central banks, guys, must implement stringent security measures to mitigate the risk of double spending in tokenized CBDCs. This includes cryptographic techniques, consensus mechanism, and transaction validation protocol to ensure the integrity and immutability of blockchain ledger. Now, look, guys, it's really important to note that central banks all over the world, they can go ahead and use updated technology that is beyond blockchain technology, and they can use gossip protocol that is implemented by Hedera Hashgraph. And in that case, guys, double spending is possible, isn't it? Now, it's really important to note, by incorporating features such as digital signatures, time-stamping, and consensus algorithm, tokenized CBDC systems can prevent unauthorized duplication of tokens and provide a secure and tamper-proof record of transactions. But look, guys, who can go ahead and verify these transactions? It'll only be the authorities, the government staff, and the employees of central bank, and you as user who will be able to verify these transactions, isn't it? But in case of Bitcoin, guys, absolutely anyone in the world can go ahead and verify these transactions. And some of the Twitter IDs, guys, they have bots that automatically identify some anomalies. But in case of CBDCs, guys, that thing is completely taken out, and the central bank will have 100% control over the transactions. Now, so far as transaction monitoring is concerned, guys, one approach to mitigating the risk of double spending is to implement real-time transaction verification mechanism that quickly validate and confirm transactions on the blockchain network by reducing the time window for potential double spending attacks. Real-time verification enhances the security and reliability of tokenized CBDC transactions. But look, guys, let's say if the person handling the code changes and if there is a political involvement, that thing can still be done, isn't it? So look, our central bank should explore solutions such as instant settlement protocols and zero confirmation transactions to further minimize the risk of double spending in tokenized CBDC system. Now, the last point, guys, I'd like to talk about is regulatory oversight. And regulatory oversight is essential to ensure the integrity and also the stability of tokenized CBDCs and thereby mitigating the risk of double spending. Regulators must establish clear guidelines and standards for the issuance, trading, and custody of tokenized assets, including CBDCs, to prevent fraudulent activities and protect investors. Now, collaboration between central banks, regulatory authority, and industry stakeholders is extremely crucial for developing robust regulatory frameworks and oversight mechanism that addresses the unique challenges that are posed by tokenization and digital currencies. So look, guys, in summary, the only thing I'd like to say is that while tokenization offers numerous benefits for CBDCs, including, let's say, increased efficiency and transparency, it also introduces the risk of double spending if not implemented securely, and central banks must employ stringent security measures, real-time transaction verification mechanism, and robust regulatory oversight to mitigate the risk and ensure the integrity and reliability of tokenized CBDC system. So let me know, guys, what are your thoughts on regarding this. And listen, guys, if you do have any feedback or suggestions, drop me an email to info@blockchaindxb.com. So these were all the information, guys, related to tokenization. So thank you so very much for joining on this enlightening journey in the world of tokenization. Now in this specific episode, guys, we've got and explored how tokenization is transforming asset representation, enhancing liquidity, and democratizing investment opportunities, isn't it? We have also delved into the critical differences between ICOs, that is initial coin offering, and STO, that is security token offering, and we've gone ahead and looked at the unique challenges and potentials of CBDCs, that is Central Bank Digital Currency. Now look, guys, it's really important to understand that as we navigate this evolving landscape, it is extremely clear that tokenization holds immense promise for the future of finance, offering greater transparency, security, and accessibility. However, guys, it's equally important to remain vigilant about the risks and regulatory challenges that come with this innovation. So look, guys, I really hope you found this particular episode informative and thought-provoking. Now look, guys, if you do have any feedback or suggestions regarding this, mention them in the comments below. And what I'd really urge you to do is, guys, please click on the follow button, give it a 5-star rating, and share the word across. So thanks so much for listening, guys, and have a nice one. Bye-bye.